why I developed this podcast and why I wanted to have these conversations with leaders within our industry was really to demonstrate the idea that not all of us have our stuff together when we jump into these leadership roles. For some, I mentioned my first boss. There was unforeseen circumstances at her credit union where she got thrust into the role at like 26 or 27, and maybe there was conversation going into that maybe someday she would take over. I know that she wasn't thinking it was going to be at that age, and she learned how to do it. She had a great network of people in the area that helped her through the challenges that are come with being a CEO. But if you don't have that network around you, you don't have someone saying, I think you can do this, it's really hard to find that confidence in yourself, I think, at times. And so I want to bring people on the podcast who are willing to share their experience. And essentially, what I would like to cherry pick out of those conversations is to say, listen, I'm talking to, like I talked to you, and it's like, I didn't know I was going to jump into a leadership role at CUNA and ACU or whatnot, right? But the opportunities, and this is what happened, to get people to say like, oh, well, I guess I don't have to have all my ducks in a row. I don't have to have everything figured out. I don't have to have 30 years of experience doing lending to be a CLO. I mean, you should probably know what a loan is. Yes, I get that. But it's like for a lot of these positions, it's like, do you have the passion? You talked a lot about having passion for your craft. Do you have the passion to lead a credit union? Do you have the passion for your members? Because if you have the passion, you will figure it out.
Well, I guess I can officially welcome you to the Credit Union Nation podcast. So I'm really pleased to have David Murphy, president of Marshfield Medical Federal Credit Union, on the podcast here. And, if you've been listening, we did a first half of this podcast on David's podcast, and I'm going to have him talk about the podcast a little bit here before I pepper him with some questions. But if you haven't listened to the first half yet, it's all me talking. It's David asking me questions about leadership qualities, and just my experience in the credit union industry. It was a great, fun conversation. So listen to that half first, and I'll share a link in the show notes here, so you can find the first half of that, and then come back and watch the second half, which is where I get to ask David all these great questions. And I just have three kind of main lines of questioning here, so I'll keep it pretty chill for you, David.
Okay,
But
good. Whew.
but first, I just want to hear a little bit about you, your credit union journey, and also about the credit union. Tell us how things are going at Marshfield Medical. Yeah.
Yeah, thanks for the opportunity, Tom. I appreciate that. So I actually got started in credit unions relatively young. So my background actually goes to the when I was at the age of 3, and so my mom did daycare. I lived out in the country outside of a small town, and so she had a couple families that she did daycare for. One of those families happened to be I think when she started, she was not the CEO, but due to some unforeseen circumstances, she actually took over as CEO of the credit union relatively young. And so when she started having a family, my mom started working with her. And so fast forward about 13 years or so, and I was just finishing up my sophomore year in high school, was just about ready to get my driver's license, decided that I wanted to start working. So I stopped in by her at the credit union and said, you don't got any work for me or anything, do you, by chance? And she said, well, I suppose we can make something work. So I started part-time with her for about a month and decided that I really enjoyed. It was just, I shouldn't say just because these positions are important too, but it started as an MSR at the credit union at part-time and really enjoyed what I was doing, work with the members and whatnot. And so worked full-time over the summer and actually worked there during high school, just that came in for a couple hours every day. And so that was at the age of 16 when I started there and went to high school, went to college, and still came back, worked summers, worked a couple random weekends here and there, and just kept my finger on the pulse of the credit union specifically. There was one year when I was going off to college where I decided, nope, so I went to college in Eau Claire, which was about an hour and a half from where I grew up. And so I wanted to spend one college summer up there with all my friends and do all the fun college stuff that you get to do. while you're there. And so there was one year where I didn't actually work at the credit union, but besides that one year, throughout school, after I graduated college, I actually went back and worked there for a couple months, and then I moved to another credit union in the La Crosse area. I worked at Ultra Federal Credit Union, which at the time was just approaching $1 billion. Now they're much larger than that. But so the credit union I first worked at was Oakdale Credit Union. They were a smaller credit union. So I got to see both sides of the credit union space, unbeknownst to me, because at the time it was just a job. Let's just face it, it wasn't anything that I was looking to stick with. And
Mm-hmm.
then I was about a year out of college. And so I went to school for accounting. My goal was to get my CPA, go work at a CPA firm. So the credit union space obviously got me the paychecks that I needed to fund my college, but it wasn't something that I was looking to stay with, honestly. So I got an opportunity to move up here to Marshfield about a year after I graduated. And so my predecessor, who knew my first boss, and I had a conversation during our interview, and she said, "Listen, I'm just looking for someone to come in, do a little bit of internal audit for us. It's a 6 month gig." And I said, "That's perfect. I'm just looking for a 6 month gig because I'm going to get my CPA. I'm going to move on to bigger and better things." And so it was a great transition to move into the area. Well, fast forward, I think it was probably 4 years, and I was still working on my CPA, so it took a little bit longer than I thought that it was going to take. And so eventually I did get my CPA, and so then my predecessor was a little stressed because she knew that my ultimate goal wasn't to leave the credit union and move on. Well, what I was able to demonstrate over those couple of years that I was there was that not only was I passionate and willing to do what needed to be done for the job, but that I had some perspective or potential, maybe I should say, to ultimately be some type of a leader within the organization. So Marshfield Medical Center is right now we're about 90 million. We're a single branch that serves healthcare here in the state of Wisconsin. At the time that we had this conversation, it was 2014. We were 55 million. So we were definitely smaller. But she came to me and sat me down and basically said, "Listen, I've got 5 years, maybe 10 years left at most. And then we're going to be looking for someone who I'm looking for a successor." And she said, "I think that you have the potential to do that." And so, as a 20-something-year-old who doesn't understand anything about anything, you're like, okay, well, sure, I could be the boss someday. That sounds great. So through that next couple of years, she devoted a lot of resources to allow me to attend events like GAC. I remember going out there for the first time, which was completely overwhelming, but just got my exposure to the industry and the different events that the industry brings forth. Was able to build out a huge network through the Wisconsin's been pretty fortunate to have a really strong young professionals program since probably one of the earliest ones, I would say, within the country. And so I was able to grow my network of people that I knew, which then, of course, expanded out beyond just my young professional colleagues, but then also the other credit union leaders and whatnot. So that by the time then, you know, unfortunately, I bring up COVID because COVID hit, and that obviously changed things a little bit. But during then those first, it was after the first year that COVID really shut things down, is when my predecessor then stepped down and retired, and so then I took over in May of 2021, and so it's 5 months, or I'm sorry, 4 years. I don't know why I said 5 months. 4 years since I took over that position, and it's been a whirlwind of a journey. I mean, it's been lots of good things, lots of challenges, just with the circumstances being what they were. Um, there's definitely a lot of challenges that smaller credit unions are facing right now, but we seem to be in a good space, I believe. Albeit with still some ongoing challenges, but really just trying to recenter what our purpose is as a financial institution, making sure that we're doing everything that we can to be able to serve everyone that needs a credit union partner at the end of the day is really what our goal is. And so it's a little different. We've had some what I would say unique challenges being a healthcare based credit union, just in the sense that COVID hits in March of 2020, and for a lot of credit unions and the people that they're serving, it's listen, I don't have a job, or I'm getting furloughed, or I'm getting laid off, or whatever, and we face that for about 4 to 6 weeks. But as everyone will know, during that time frame, healthcare workers was one of the few, I'm not saying the only, but one of the few industries where it's like, we need you more now than we need you ever, right? And so we actually faced the opposite, where we had people who were working more, and then they they didn't need the financial assistance necessarily that a lot of others did. But what they did need was a break because by, the end of that first year when people were getting work 60, 70 hours and there was nothing else to be able to go home to and relax and, vacation or whatever that you would use to blow off steam. There was some challenges of, okay, well, how do we help people outside of the financial space? And I would say we did an okay job with that at the end of the day, but it definitely has been challenging. We've seen a lot of turnover within the space, a lot of changes within the structure of how healthcare is currently operating. But ultimately, we still stuck true to what our mission is to figure out a way to be able to help our members in whatever capacity they needed. So we've kept that mission at the heart of our operations, and we will continue to keep that at the heart of what we're doing going forward. But overall, we're taking baby steps forward, which I think is a positive thing. We've got some things in the hopper, so to speak, that I feel like are really gonna be game changers for us in the next 12 to 24 months, let's say, from a strategic standpoint. And so I'm optimistic as a small credit union that's, there's not a lot of us anymore that are either industry based or seg based. A lot of us have gone community chartered, and that's okay. But as an industry based institution, I'm optimistic because we have industry that is not going to go away. Healthcare is one of those things where, it's going to change. Like obviously the use of robotics when it comes to surgeries and whatnot is already taking place. And I know that there's a lot of debate in the healthcare space as far as like their use of AI and what that's going to look like. But at the end of the day, I don't see a situation in which you're going to go up to a hospital and it's going to be all robots and AI doing your surgeries and your check-ins. You're always going to need people, I think, on the back end somewhere that's going to be driving the healthcare space forward. So from our perspective, we look at that as, this industry is not going to go away like unfortunately some of the other industries throughout our country have experienced, the loss of. And so we're optimistic about what the future looks like for us from a small credit union, but also from a industry-based credit union ultimately.
Yeah, so at your credit union partner, we are always talking about growth. We believe growth is really important to the health of an organization and specifically a credit union. You mentioned that when you first were starting the sort of your leadership journey, the credit union was 50, 55 million in assets, and now you're up to 90, almost 90 million in assets.
Yep.
I would guess maybe some of that growth took place during the pandemic, and the influx of money that came in. But what are the other reasons that the credit union has grown, and where have you had success in growing the credit union over the past couple of years?
Yeah, you are correct in that. So from 2010 when I started, I remember the first month that I put together our financials, we were about 49 million. So February of 2020, putting together the financials, I believe we were like 68 million. So we did have some growth over that first 10 years that we were in existence. The COVID years, like a lot of institutions, we definitely saw an influx of deposits. Again, where for some institutions, especially I imagine like your CDFIs, your low income designated, those members, when they got those stimulus payments, they were like, I need that to be able to put food on my table. So they were using that money more rapidly. Again, for our members, a lot of them were, okay, well, I'm actually working more than I was pre-COVID, and then I'm getting these payments on top of it. So we saw an influx of those deposits, and they've started to go out the door here and there, but for the most part, they didn't really need them, honestly. And so it was a little bit of a unique challenge because we had to figure out what to do with that cash at a time when, you know, if you've got a lot of cash, typically you aren't doing a lot of borrowing or whatnot. And so there was some unique challenges there. I will say that while our assets have grown, and it's a testament to the people that we are working with, one of the challenges that we are facing, and I'm hoping that we can start to turn around here over the next year or 2 years, is we have seen a steady, small, but a steady decline in membership over the years. Part of that due to over the last couple of years where we saw a pretty mass exodus in our area, at least when it comes to healthcare workers just retiring or leaving the industry altogether. Marshfield, so we're in central Wisconsin. There's not a lot around us. We're within a couple hours of all the bigger areas within like Wisconsin. We're 3 hours from Minneapolis. We're 2 hours from you in Madison. We're 3 hours from Milwaukee. So we're close to everything, but we're not like there. And so we have experienced a lot where people who are retiring are also going, well, my kid's down in Green Bay. I'm actually moving over there to be closer to my grandkids. It's difficult then from our perspective to try to retain that membership when they're saying, well, I'm never coming back to the area. Like I don't have a tie here because everyone else is, geographically dispersed. So that's been a little bit of a challenge. So one of the things that we're looking to do is try to turn around our membership decline numbers and at least steady it. And then obviously we want to turn that into positive growth here in the future. So some of the initiatives that we are deploying here, we are optimistic are going to help us in that avenue. So it's, when people ask like, oh, I see you're growing, I have to kind of caveat it because it's like some of the metrics, yes, like we continue to grow our assets. And so that means that we're doing a better job of reaching our current members. But at the same time, through attrition, through, unfortunately through passings, that kind of stuff, like we are still losing more members in one fashion than we are bringing in. And so that is a concern overall. I think for us, I'm sure that the larger institutions in our community not necessarily agree with this, but I think for us, anyways, it's just a testament to the fact that we're just not a growing area from a community perspective, and so we are unique in some sense because we have the Marshfield Clinic, which is now a part of the Sanford Health Network based out of the Dakotas, but having a sizable health system here in a community that's only 20,000 people. So, you imagine that probably half the people in this community are somehow affiliated with that organization. It's a positive, but then it's also when that organization is struggling or has some challenges or aren't bringing new people in, then obviously that has a detrimental effect on the community as a whole. So looking to expand outside of the Marshfield area, try to build different relationships with some of our other healthcare-based organizations as well, because we're pretty fortunate being in the Midwest and specifically here in Wisconsin that we have access to pretty good healthcare networks. Like you guys have UW down by you, but we've got several of them throughout the state, depending on where you're at geographically. And so we've identified that there's a lot of potential there. We just need to get to a space where we are taking advantage of those, or at least building those relationships and having those conversations and going there. So that's again where, I look at that one metric and I'm like, yeah, it hasn't been good since I've started. But on the second hand, it's like, well, there are things that we can try before we need to take alternative routes, so to speak, for the future of our organization.
Yeah, I think the membership piece is probably the thing that most small credit unions struggle with, and credit unions in general. And my last sort of line of questioning for you will touch on some data that I've got that I'm going to be presenting next week at the Montana Credit Union Network's annual meeting, but also
Mm.
that I'll be using during planning sessions.
Okay.
We really were trying to understand sort of consumer behavior and what leads someone to choose a different financial institution. So I'm going to bounce that data off you to see how you feel about it.
Yeah, please
But
do.
before we get to that, my second question for you, or my second line of questioning, is about the podcast.
Yeah.
So you've launched this podcast, and I think you've got about 10 episodes now. Maybe 8, 9, 10.
So our recording would have been episode 8 of it.
Oh, I'm right.
Yep.
Okay, so we've got 8 episodes.
Yep.
How is it going? And what's the reason that you started it? What are you hoping to do with it?
Yeah, I appreciate you asking about it. So I started this podcast last April, I think is when I actually launched it. So it's called See You at the Top. And the idea behind it was that, I mentioned at the beginning that my involvement with the Young Professionals Network really got me to a space where I felt prepared to be able to jump into some type of a leadership position, which is great. I was able to start when I was in my mid 20s, so I got 10 years basically under that umbrella. And so I was able to take advantage of that. But there's a window, especially, let's just face it, as the number of smaller credit unions go away, you're going to have some of these larger credit unions where you don't get the opportunity to be CEO at 30 or 35 even. And maybe even your jump into the leadership exploration, if you want to call it that. Maybe you're not even starting that conversation until you're 35 or 40 or whatnot. And so for a lot of these individuals and professionals within the space, there's this window where if you're not a young professional getting the exposure there, or you haven't already been groomed for, the last 10 years to take over a C-suite spot or whatever that looks like, you're just kind of stuck. And if your organization isn't helping you get to the training that you need or the exposure or the networking or whatever that looks like, it's really difficult to either build that mentorship relationship with someone who can coach you that way or just get the exposure that you need to from a leadership perspective. And so what I wanted to do, or I'll back up one more step and just say that I've even had conversations with colleagues that I have gotten to know over the years through the YP network, and they're, I'm 39 now, so we're all about the same age, and I say, hey, there's this opportunity at ABC Credit Union. I see, like, would you consider going for it? The response I get leads me to believe that the confidence level or the thought process of, well, yeah, I can do that isn't there because they'll disqualify themselves almost immediately. Oh, well, I don't have any experience to do that, or I don't think that they would hire me for A reason or B reason or whatever the case is. And the reality is that we have this disconnect within the industry where for some credit unions, they're struggling. The future outlook is not great. And maybe they just decide, okay, listen, it's just we just need to merge away. And I'm not going to say that every merger is a bad merger. I understand there's circumstances in which a merger is probably the most viable. But there are a number of instances that I've heard throughout the years and even recently, so this isn't like the phenomenon's going away, where a credit union just says, well, we just didn't have anyone in our ranks to take over. And I didn't want to, like, we didn't know anybody. And then I see this network of people who are there who I feel maybe they don't have the confidence to go after it, but I see the potential in them to be able to say, we just need to bridge that gap and bring these people together. So if the credit unions and the outgoing CEOs and the boards who maybe don't have the network and the relationships with some of these young professionals or emerging leaders, if they're not seeking them out, I want to instill in this next generation of leaders their confidence to say, hey, listen, I see there's a COO position over there. I have no idea who this credit union is, or I've never talked to the CEO. I'm going to go for it. Or if it is a CEO position, to go for it. Because then if at least it puts the onus back on the board. If they get an inflood of resumes and they say we don't like any of these, we're going to merge anyways, there's nothing that anyone could have done in that situation. But if they're seriously coming out and just saying, well, we just didn't have anyone who showed any interest in taking over the credit union, I want to make sure that we're exploring every single avenue before a credit union gets to that space and decides to merge away. And so, why I developed this podcast and why I wanted to have these conversations with leaders within our industry was really to demonstrate the idea that not all of us have our stuff together when we jump into these leadership roles. For some, I mentioned my first boss. There was unforeseen circumstances at her credit union where she got thrust into the role at like 26 or 27, and maybe there was conversation going into that maybe someday she would take over. I know that she wasn't thinking it was going to be at that age, and she learned how to do it. She had a great network of people in the area that helped her through the challenges that are come with being a CEO. But if you don't have that network around you, you don't have someone saying, I think you can do this, it's really hard to find that confidence in yourself, I think, at times. And so I want to bring people on the podcast who are willing to share their experience. And essentially, what I would like to cherry pick out of those conversations is to say, listen, I'm talking to, like I talked to you, and it's like, I didn't know I was going to jump into a leadership role at CUNA and ACU or whatnot, right? But the opportunities, and this is what happened, to get people to say, like, oh, well, I guess I don't have to have all my ducks in a row. I don't have to have everything figured out. I don't have to have 30 years of experience doing lending to be a CLO. I mean, you should probably know what a loan is. Yes, I get that. But it's like for a lot of these positions, it's like, do you have the passion? You talked a lot about having passion for your craft. Do you have the passion to lead a credit union? Do you have the passion for your members? Because if you have the passion, you will figure it out. You're going to figure out what
Mm,
needs to be done. And if you do fail, well, failure is a part of life. Like, but did you try? Did you do everything you could do to make sure that everything succeeded? And I just see that there's this group of people who I think would do really well, and they're just not getting lined up with the credit unions who are seeking those people. And so obviously we can't go around to every credit union who's got a outgoing CEO and make these connections, but hopefully we're just reaching the right people so that's like, okay, listen, we're going to keep as many small credit unions or mid-size even. I mean, it's not just the smaller ones, unfortunately, who are merging anymore. It seems like the larger ones are for whatever reason. But, any credit union that we can save because we were able to have someone walk into their shop with the confidence to say, listen, I want to give this a go. That's all we can ask for. Because I feel that, through networking and everything else, that the ones who have been doing it for a while, the ones like us, like me, who's only been doing it for a couple of years, like we will help you through this. We will take the time to work with you, so whether you meet someone at a league event and it's like, yeah, let here's my contact information. You reach out with anything, I will help you through this because I want your credit union to succeed as well. There's so many of us that are in the industry that are like that. And so I just want to give these people an opportunity and the confidence to go after these opportunities as opposed to thinking, well, I got to wait 20 years because I don't know what the industry is going to look like in 15 years or 10 years even. And so to think, oh, well, in 10 years, all these credit unions are going to be looking for CEOs and then I'll be ready. Well, they may not be. They may not be here anymore. I hope not. I hope that it is the same that it is today, but we know what the numbers are for the last couple of years and it's just not true. So that's the
Mm.
thought process behind it. Like I said, it's see you at the top. One of the challenges with the podcast is that I'm trying to record it in amongst my day-to-day stuff, and so I don't always have a consistent schedule with it. And as you mentioned, I'm only on episode 8 after a year, so it's like I know there's a lot of conversations that I'm missing out there, and a lot of great leaders that I need to reach out to and get on the podcast ultimately. But that's really the thought process and the goal behind it. I have no skin in the game. This is my way of giving back because I feel like there's so many who have given to me over the years and have helped me get me into this position. Some of whom aren't even in the industry anymore, and it's really hard to get back to them specifically, but it's just passing that torch along to the next generation.
Yeah, yeah. Well, I'm glad you're working on this issue. I mean, it's probably the most existential facing small credit unions is finding those successors. So many times back when I was working with CUNA, I'd have these credit unions reach out to me and say, I'm ready to retire. I live in this really tiny town in some rural place in Ohio. Can you help me find somebody? And I'd be like, well, I don't think so. I don't know. I don't know how to solve that problem.
Yeah.
I think we need some sort of, in addition to sort of raising awareness of the opportunity to connect young professionals with these opportunities. I think we need a broader strategy. Like someone needs to really sort of spearhead this problem because it could be one of the most impactful things that we do in order to help small credit unions is figure out this succession piece and this leadership piece. So I'm really glad that you're bringing light to this issue. So last couple minutes we have here, I have an 11 o'clock that
Oh,
I got
okay.
to
Yeah.
jump to, but
Yep.
I want to share the consumer research that I've been doing. I'll just share kind of the two big findings that I
Okay.
think are most fascinating to me, and I want to get your feedback, your thoughts on them. The first is, we tried to identify, sort of the Venn diagram of, primary financial institution user and products and services that they use at the credit union, or the bank. And the two products that are most predictive of primary use of a financial institution are, I mean, I guess I could ask you, see if I could quiz you on what those things are. Let's do that. I'll put you on the spot.
So I would guess checking account and mortgage.
Close, checking and direct deposit.
Okay. Okay.
Yeah. Um, and so that was really eye-opening. But I think also, helpful to really understand the, kind of some strategies that you can consider as far as increasing your primary users of your credit union. If you can get someone's direct deposit, and if you can get them to open a checking account. And, some other additional follow-on data around the checking is that people on average hold their primary checking account for 17 years.
Wow.
So that kind of shows you how difficult it can be to pull someone away from a long-term relationship.
Yep.
And also it shows you the importance of getting in early, and getting, that relationship when someone's young and just starting out, building their relationships with financial institutions. So that was really great, insight. The sort of not so great news is on market share, and for millennials and Gen Y and Gen Z, the big banks and the fintechs are kicking credit unions' butts. in a big
Yeah.
way. Like 90% of the market share goes to big banks and into fintechs among the youngest cohorts, the people who were trying to be our core members into the future. And I think there's a lot of reasons for it. It's technology, it's accessibility through branches. And those are probably kind of the biggest drivers of it as well. But just kind of wanted to get your feedback on some of that data in the last couple of minutes we have here before we sign off.
Yeah, I will say that our credit union struggles with the younger demographic as well. It's primarily that high school through college age. I think we're doing a decent job is that we've launched a rewards club account, kids rewards club account. Basically, it's a high yield savings account for anyone under the age of 18. It actually gives them rewards, little prizes if they actually physically come into the branch. So we're trying to teach them that, hey, we're here, we're a viable option. So parents are okay with that because they see the high yield and everything like that. And so I think we're doing an okay job there. That 19 to 25-year-old role, we are dropping the ball completely on that. And I think a lot of this, like you're saying, has to do with the idea that, Chime's a big one that's out there right now. People just use their Venmo accounts for keeping them like they're acting like it's a checking account, especially when you couple it with their credit cards. So there's definitely a lot of unique challenges with how do we I don't necessarily, I mean, it is an awareness issue, and this is just like in general, that it's awareness issue of the industry, but it's also like, okay, well, even if they're aware that we're a credit union, we're here to serve them, if we don't have the product to compete with a Chime that's really easy and there's no fees and whatever else behind it, and that you can put your direct deposit into it, like we have to crack that nut. And I don't know. I wish I had the insight, a better insight as to how to do that. But I think that I know that we're not alone in that challenge. I know that there's a lot who are trying to figure out like, okay, how do we actually either come up with a partner, find a fintech to partner with, whatever it looks like, to be able to then offer an attractive product that can compete with these other fintechs that are putting all their resources into, you got a company like SoFi and it's like they're a fintech and then they spent $5 billion to sponsor or whatever they sponsored, SoFi Stadium. And it's like, we don't have the budget to be able to compete with that. So obviously, if they're putting that much money into advertising, what are they putting into their R&D and that kind of stuff? So like, just trying to figure out what that looks like, I think is the going to be the $1 million question, I think, for a lot of institutions, even the large ones, like the $1 million or the $1 billion credit unions. Like, if they can't figure that out, they're not going to be viable in 10 to 15 years either. So we got to figure out as an industry how to tackle that.
Yeah, yeah. Well, what do they always say, right? Admitting that you have a problem is the first step towards solving it, right?
True.
So we definitely have a problem among younger groups, but I believe in the credit union industry to be resourceful, and I think that there are solutions. I mean, it kind of does go back to what we always say at YCup here, which is you gotta stand out in a specific way. You might not be able to compete with a SoFi or Chase or some of the big players in the industry in all ways, right? But you might be able to compete locally in a market that's being underserved or where there's an opportunity. And so being really strategic about finding those opportunities and trying to win in a very specific way in that specific space, that's kind of the first step, right? Like you got to figure out places where growth is truly possible, grow, and then what's the next step is keep making investments in your operations and your technology and your accessibility, your brand strategy, and slowly but surely you'll grow to the point where you can maybe start making inroads on some of these advantages that the other institutions have.
Yeah, for anyone listening, I think you hit it on the head when you see a lot of these, even the large credit union mergers, and they talk about, well, we need scale and we need to be able to serve all these people and whatnot. And it's like, I understand that strategy, but I think for a lot of credit unions, it is figure out your niche, do it better than anyone else, and you'll never have a problem with being an ongoing concern because you're going to meet the needs of your people, your members, your communities, and they're going to love you for it because they can't get it anywhere else, or you do it better than everyone else. And I think if you lean into that, I think you'll be fine, honestly. So good point.
Yeah, yeah, absolutely. Well, David, thank you so much for joining the podcast. Really appreciate this was so fun, trading podcasts here and
Yeah,
appearing on each other's
absolutely.
podcasts. So let's do it again soon. Good luck with everything up there, and I know we'll talk soon. Say hi to my buddy Derek when you see him.
I will. I will. He sent me a message today. He's actually out on his boat. So Derek, if you listen to this, you stinker.
Yeah, working hard as always, right? Yeah.
Yeah, for sure. But no, I appreciate the conversations today, Tom. It's been great. So thank you.